What is meant by the term internal control? Internal control is a process established by the board of directors, management, and other personnel designed to provide reasonable assurance about the achievement of objectives in the following three categories: reliability of financial reporting, effectiveness and efficiency of operations, and compliance with laws and regulations. The above three categories are most often referred to as management's objectives. In the case of internal control, the phrase reasonable assurance means that the cost of the internal controls should not exceed the benefits to be derived by placing the controls in operation. Management makes decisions about how much time, money, and effort to put into controlling certain situations. The second standard of fieldwork of the 10 generally accepted auditing standards states that a sufficient understanding of internal control is to be obtained to plan the audit and to determine the nature, timing, and extent of the tests to be performed. The auditing standards contain 5 primary reasons why management understands the controls. First, understanding the internal controls is required by GAS. Second, the auditor spends time understanding the internal controls to plan the audit by performing procedures to understand the design of the relevant controls and to understand whether or not the client has placed the necessary controls in operation and is using the necessary controls. Third, auditors understand the internal controls to help identify potential misstatements. And fourth, to help identify the high audit risk areas. Finally, the auditor understands the internal controls to determine the nature, timing, and extent of the tests to be performed. Recall, management is responsible not only for the financial statements, but also for the internal controls. While the above 5 reasons are the primary reasons auditors take the time to understand the controls, a secondary objective of understanding the controls is to provide the client with constructive suggestions for improvements to the accounting systems and financial controls. Recall the steps in a typical audit: audit planning, understanding the internal controls, performing substantive tests, completing the audit, and issuing the audit report. Note, the above 5 steps do not include performing tests of the controls. Why? While understanding the internal control process is required by GAS, performing tests of controls of a client's transactions is only optional. Auditors perform tests of controls only when they plan to assess control risk low. When a client's control risk is assessed at a low level, the auditor may reduce the extent of the substantive tests. Since conducting substantive tests are more costly than performing tests of controls, it is to the auditor's benefit to perform tests of controls and assess control risk at a low level. We will discuss this concept throughout this recording. But before we learn the steps auditors perform to assess control risk at a low level, I must remind you that auditors can never rely entirely on the internal control process for the fair statement of the financial statements. Even the very best internal controls may break down due to the inherent limitations of any control process. CPA candidates should know the following 6 inherent limitations of any control process. They are as follows: 1. Misunderstandings. 2. Mistakes in human judgments. 3. Carelessness. 4. Mistakes due to human failure, such as a simple error. 5. Collusion. 6. Management override. Management override arises when management established policies and procedures are not consistently followed by all company employees. The internal control process consists of 5 interrelated components: control environment, client's risk assessment, control activities, information and communication, and monitoring. A typical multiple choice question will inquire about the relationship of the control components to management's objectives. Know that there is a direct relationship between a client's control components and management's objectives of reliable financial reports, effective and efficient operations, and compliance with laws and regulations. For example, the better job a client does of monitoring their controls and assessing their risks, the better chance they have of achieving their objectives. The objectives are what an entity strives to achieve. The 5 control components are steps to achieving the objectives. Of course, the 5 components should not be applied in the same manner and depth for all organizations. Auditors consider the components in the context of the organization's size, the ownership characteristics, the nature of the business, the diversity and complexity of its operations, the methods of processing, transmitting, maintaining, and assessing information, and applicable legal and regulatory requirements. A large multinational corporation would most certainly require different controls than a small family-owned corporation operating in one city. Now we will discuss the 4 steps auditors utilize to understand and assess the internal control process. Overall, the 4 steps are as follows. First, the auditor must understand the client's internal control process. Second, based upon the results of the understanding process, the auditor will assess the control risk. Third, if there is a chance that the control risk can be assessed at a low level, the auditor will continue by performing tests of controls to determine just how effectively the controls are operating. In some situations, auditors decide the additional effort required to conduct tests of controls is not worth it because either they discover that the client is not using any controls or the controls appear to be poorly implemented. For example, if upon interviewing the client, the auditor learns that they are not control conscious and have not placed any controls in operations, the auditors would only complete steps 1 and 2. Document the understanding of the controls and assess control risk at maximum. However, since tests of controls are less expensive than performing substantive tests, it is the auditor's hope that they find the controls to be testable and operating effectively. The auditor is pleased when they can rely upon the client's controls to detect and prevent material misstatements on the financial statements. When the client's internal controls are operating effectively, the auditor can justify a reduction in the amount of the more expensive substantive tests. The 4th and last step is to determine the final level of assessed control risk. It is crucial that you possess knowledge of each of the 4 steps in the internal control process. Therefore, we will spend the next several minutes covering the 4 steps to understanding and assessing the internal control process.